Now we are going to see about moving averages, in depth about moving averages we are going to see. So now in moving averages, we are going to use only simple moving average. There are many types of moving average, like simple moving average, like exponential moving average, weighted moving average, okay. And there is also another type called Hull, Hull, Hull moving average. There are many types of moving averages, double exponential, triple exponential, many types of moving averages are there. But we are going to follow only simple moving average. Why we are following simple moving average? Because simple moving average gives weightage to all the prices equally. Simple moving average gives importance to all the prices equally, but exponential moving average and weighted moving average gives special importance to few certain prices. Exponential moving average and weighted moving average are giving special importance. They are giving special weightage to recent prices alone. They are ignoring past prices and they are giving importance to recent prices alone. Okay, this is partiality. Okay, I don't want any partiality. I need equality. I need equality between all the prices. So only I am using simple moving average. And in this simple moving average, we are going to follow 3 time frames. 3 important time frames, okay? 20 SMA, 50 SMA and 200 SMA. Okay, for 20 SMA, try to use green color. For 50 SMA, try to use red color. For 200 SMA, try to use black color. Okay, this is for uniformity. Okay, this is a uniform color code. Okay, uniform color code. So if you are posting any chart, I can easily find this is 20, this is 50. Similarly, if I am posting any chart, you can easily understand, okay, green is 20, red is 50. You can easily understand. So this is a uniform color code. Okay, for 20 use green color, for 50 use red color, and for 200 use black or white. Now among these 3 indicators, 20 and 50 are called as twins. 20 and 50 are called as twins because 20 and 50 are having same character. 20 and 50 are having same character. And we are going to use moving average in 5 minutes only. We are going to use moving average in 5 minutes only. Don't forget. You can use in 15 minutes, you can use in 3 minutes, but primarily focus in 5 minutes because we are scalpers. We need 5 minutes only. Now these are the tricks which we are going to see in moving averages. Okay, there are many tricks. As I told earlier, there are 3 trends in market. Okay, there is bullish trend in market, there is bearish trend in market, there is sideways trend in market. Okay, to identify each and every trend, we are going to see few tricks. Okay, we are going to see few tricks. Okay, I will tell you. Okay. And another one important thing, after completing this webinar, okay, tomorrow Sunday it is a holiday, read my material at least 3 times. Read my material at least 2 times or 3 times. Please don't regret reading. Okay, this is very, very important price action methodology, which is used by Ashwani Gujral, which is used by Oliver Velez, which is used by most experienced traders. They will not tell you. Okay, so read my material at least 2-3 times. Okay, now I am going to tell you the character of 20 and 50. Many people will teach you crossover strategy. Many people will tell you golden crossover strategy. Okay, these are very kiddish strategies. Okay, these are school level strategies. Okay, these are primary school strategies. Don't follow them. Okay, there is a true character for 20 and 50. Okay, there is a true character of 20 and 50. If somebody is teaching you crossover strategy, okay, just assume that he is a LKG in technical analysis. Okay, just assume he is a LKG UKG student in technical analysis. Now I will tell you the true character of 20 and 50. Don't blink your eyes. Okay, listen very carefully. This is very, very important. Okay, the first character of 20 and 50 is rising railway track pattern. If you want, you can take notes, but don't forget to listen my class also. Rising railway track pattern, it is the first character of 20 and 50, and this is for identifying a bullish market. This is for identifying a bullish market. Okay. Now, what happens in a rising railway track pattern? Okay. Don't forget, we are going to use this in 5 minutes only. Whatever concepts which we are going to see now are only for 5 minutes chart. Okay. Okay. And before starting this topic, let me tell you, lunch break will be at 1 p.m. Okay. Lunch break will be at 1 p.m. Don't think when I will leave for lunch. Okay. Lunch break will be at 1 p.m. only. So listen carefully. In a 20-50 rising railway track pattern, 20 will be going up like this. 20 will be going up like this. And 50 will be following 20. 50 will be following 20 like this. Now see the structure of 20 and 50. Remember, red is 50 and green is 20. Okay, don't forget the color code. Okay, now we are going to see only 20 and 50 character. Okay, now see the structure of 20 and 50. Both are going parallel. Both are going parallel. So only we are calling it as a railway track pattern. How does a railway track looks like? A railway track looks parallel like this, right? Railway track looks parallel like this. Similarly, 20 and 50 are going parallel like this. Now what the candles will do? See, in 5 minutes chart, candles will be taking support at 20 continuously, and the candles will be going up. With the help of 20 SMA, candles will be going up. If 20 is broken, in some cases, the candles will take comfortable support at 50 SMA. The candles will take comfortable support at 50 SMA, and once again the uptrend continues. Okay, so the first point is the candles will take support at 20 SMA, or the candles will take support at 50 SMA. Anywhere the candle will take support. Okay, so the first point is the candles will take support at 20 SMA, or the candles will take support at 50 SMA. The second important point is, each and every time the candles will be making higher high and the candles will be making new day high. Okay, so each and every time the candles will be making higher high and new day high. For example, at 9:30 the high will be 100 rupees. At 10:30 the high will be 120 rupees. At 11:30 the high will be 140 rupees. Like this, each and every time the candles will be making higher high and new day high. Okay, now this railway track pattern, this is second point. This railway track pattern will be visible for you. This railway track pattern will be visible for you at 10 o'clock. At 10 o'clock. Sometimes before 10 o'clock also it will be visible. Okay. Sometimes before 10 o'clock also it will be visible. But the optimum time for railway track pattern visibility is 10 o'clock. Okay. And railway track pattern will be there for the whole day. RTP will be there for whole day. Okay, RTP will be there for the whole day. From morning 10 o'clock to evening 3:30. The whole day RTP will be there. What is RTP? Railway track pattern. Okay, the whole day RTP will be there. Okay, now where you will take position, what you should do. See, this is a pattern for bullish market. You should take position when the day high is broken. Okay, when the day high is broken, you can take position. When the day high is broken, you can take position. Each and every time when the day high is broken, you can take a long position. Where you will keep your stop loss. So you have to buy when the day high is broken. Where is your stop loss? Your stop loss will be below 20. Below 20 SMA. What is your target? Your target will be CPR levels. CPR levels R1 or R2 or R1 or 250 percentage. Okay, so this is your important thing. Okay, so once again I will tell you, in a rising railway track pattern, and another one important thing many people will forget. Okay, in a rising railway track pattern, 20 will be above 50. 20 will be above 50 in a rising railway track pattern. Those who are new to moving averages, they will never know this. Okay, so in a rising railway track pattern, it is a bullish identification. It occurs in bullish market. Whenever there is a bullish market, rising RTP will happen. And in a rising RTP, 20 and 50 will be going parallel like a railway track pattern. Okay, the first point is candles will take support at 20 SMA, or the candles will take support at 50 SMA. Okay, and each and every time, the second point, the candles will be making higher high and new day high throughout the day. Right from morning 10 o'clock to evening 3:30, we will be getting new day high. Okay, each and every time we will be getting new day high. Okay, now when the RTP is visible, sometimes the RTP is visible at 9:15 itself, sometimes the RTP is visible at 10 o'clock. Okay, and the RTP will be there for the whole day till 3:30. RTP will be there. Okay, if you are seeing RTP after 11 o'clock, if you are seeing RTP after 12 o'clock, it is a fake RTP. Okay, how to identify a fake RTP? If it is forming in between the day, if it is forming at 11 o'clock, if it is forming at 12 o'clock, if it is forming at 1 o'clock, it is not at all an RTP, it is a fake RTP. Okay, and the very important thing, when you will buy, when you will go for a long position, you should go for a long position when day high is broken. Okay, when the day high is broken, you will go for a long, and your stop loss will be below 20 SMA. Your target will be CPR level. Okay, now I will tell you about this falling RTP. Now I will tell you about falling RTP. This is the concept for rising RTP. Now I will tell you for falling RTP. After that, I will show you many examples. Okay, after that, I will show you many examples. After completing the examples, you ask the doubts. See, Mohammed Asif, I already told what is the stop loss. Stop loss is below 20 SMA. I have already written in the screen. See the screen properly. Stop loss is 20 SMA, below 20 SMA. Okay. So now we are going to see falling RTP. For bullish market, it is rising RTP. Now for falling market, now for bearish market, it is falling RTP. Everything will be opposite. Everything will be opposite. I will tell you. Just sit comfortably in your chair and just listen carefully. What is RTP? RTP is railway track pattern. Okay. Similarly, we will use this for 5 minutes chart only. Again and again, I am telling you should use only in 5 minutes chart. Don't ask small doubts like which time frame I should use. Okay, don't ask these doubts. Surely I will cry. Okay, don't ask small doubts like this. You should use only in 5 minutes chart. So in a falling RTP, what happens? See, 50 will be going down like this. Okay, 50 will be going down like this, and 20 will be above 50. Sorry, 20 will be below 50. This is how a falling RTP looks like. Okay, so in a falling RTP, the very important point, 50 above 20. Now what happens? Now what the candles will do? See the structure of 20 and 50. The 20 and 50 will be going very parallelly like a railway track. Okay. Now what will happen? Candles will take resistance at 20. Candles will take resistance at 20. If the 20 SMA is broken, if the 20 SMA is broken, the candles will take comfortable resistance at 20 SMA. Sorry, 50 SMA. The candles will take comfortable resistance at 50 SMA, and again the downtrend continues. See, again the downtrend continues. Okay. So same way we saw rising RTP, same concept for falling RTP. Now what happens? Now what is the first point? The first point is the candles will take resistance at 20 SMA. Candles will take resistance at 20 SMA, or the candles will take resistance at 50 SMA. So this is the first point. What is the second point? The second point is the candles will be making lower lows. The candles will be making lower lows, and the candles will be making new day low. Lower low and new day low. This is second point. Okay. At 9:30, the low will be 150 rupees. At 10:30, the low will be 130 rupees. At 11:30, the low will be 120 rupees. Like this, each and every time the low will be getting decreased. Now, when you will take a short position, what is short? What is long? Long means buying and selling. What is short? Short means selling and buying. Okay. Now, when you will take a short position, okay, your entry is when the day low is broken. When the day low is broken, you will go for a short entry. And what is your target? Your target is nearest CPR level. Nearest CPR level. What is your stop loss? Your stop loss is above 20 SMA. Your stop loss is above 20 SMA. Same points are applicable here. The falling RTP will be visible from 10 AM or even before. Before 10 AM itself, the RTP will be forming. Okay. And the whole day RTP will be there. Whole day RTP will be there. If RTP is forming in between 12 o'clock, 1 o'clock, 2 o'clock, then it is a fake RTP. Remember one point, you should go for buy only when day high is broken in a rising RTP. You should go for sell only when day low is broken in a falling RTP. Okay. Now I will show you many examples. I will show you examples of charts. See, if day low means current day low. Day low means current day low, not previous day low, current day low. I am mentioning about current day low. See this chart. Okay, see this chart is Jan 20th, 2020. You just look at the 20 SMA and 50 SMA. See the structure of 20 and 50. Okay. See the structure of 20 and 50. The falling railway track pattern is visible for you at 10 o'clock. At 10 o'clock, falling railway track pattern is visible for you. Now what you should do? Now you should mark the day low. Okay, immediately draw a support line at the day low. This is the day low at 10 o'clock. At 10 o'clock, this is the day low. Mark the day low. Okay, now where you will keep your stop loss? Your stop loss will be above 20 SMA. Okay, if your stop loss is going very high, what you can do? You can keep the candles also as your stop loss. The previous big candle also you can keep as your stop loss. Now, what is your target? Your target is the nearest CPR level, which is S2. S2 is your target. After that, what is your target? S3. But before S3, you have to take S2, S3 50% as your target. S2, S3 50% as your target. So your shorting opportunity is activated here. See, slowly the candles are taking resistance at 20. This is the important character of railway track pattern. 20 will resist the candles. 20 will not allow the candles to go up. 20 will not allow the candles to go up. And once again, you are getting a shorting opportunity. See here, at between 12:30, you are getting another opportunity to short. Again, you can short there. Okay. Again, at 1:30, you are getting a shorting opportunity. See, at 1:30, again, day low is getting broken. Okay. So, in a railway track pattern, the whole day it will be forming as a railway track pattern. The entire day, railway track pattern will be active. And each and every time, the candles will be breaking the day low. And it will be giving us fresh low. Each and every time the candles will be giving us fresh flow. Okay, this is called as falling railway track pattern. We will see another example. See, this is another example on Jan 6. Okay, see, before going to the next example, I will show you action replay in practical chart. I will show you action replay in a practical chart so that you will understand better. So I am going to show you the action replay of February 18. February 18, I am going to show you action replay. Please listen carefully. Okay. We are going to see the action replay for February 18. So this is the first candle. Okay. On 18th February. This is the first candle. Okay. I told you very clearly RTP is visible at 10 o'clock. Okay. See, in some cases like this is what I told. Okay. In some cases like this, in some cases, what happens? RTP will be visible in the first candle itself. See, this is how a root of RTP looks like. See, this is the root of RTP. Okay, the formation of RTP. The formation of RTP will be looking like this. Okay, this is the formation of RTP. Now what you can do, see, slowly RTP is forming. Okay, see, look at the time, 9:40. Slowly RTP is forming. Now what you have to do, you have to mark the day low. Where is the day low? See, the 9:30 candle. The 9:30 candle is the day low. Okay, I am marking the day low. Okay, I am marking the day low. When this day low is broken, I will go for a short. I will go for a short. Okay, what will be my target? My target will be CPR. Okay, according to CPR, see, S2 is there. Okay, S2 is there. Okay, since S2 is very near, what I will take? I will take S2, S3 50%. I can even take S2, S3 50%, or even I can take 25% of S2, S3, because even the 25% of S2, S3 will give me more points. See, if I am shorting at this particular point, I will be getting a solid of 100 points at 25% itself. Okay, so whichever is very near, I will exit. Okay, so now I am waiting for a short entry. See, there is no proper candle closing, so I will wait for shorting. Okay, see, look at the RTP. Inch by inch, RTP is forming. Inch by inch, RTP is forming. Look at the action replay. Okay, inch by inch, RTP is forming. Okay, so now we can enter. Okay, now we can enter. Okay, above 20 SMA, you cannot keep your stop loss. Above 20 SMA, you cannot keep your stop loss, because your stop loss becomes very big. Your stop loss will become very huge. Okay, so what you can do, you can keep your stop loss above the previous candle. You can keep your stop loss somewhere around above this previous candles. Okay, now my short entry is triggered. My short entry is triggered. See, within one candle, my target is reached. Within one candle, my target is reached. Okay, see, everybody can see the action replay, right? One person is telling he is not able to see the action replay. Everybody can see the action replay, right? Is the action replay clear for you all? You can all see, right? Because one person is confusing me. He is telling chart is not visible, action replay is not visible for him. Okay, so then it is a problem for him. So see, within one candle, my target is reached. Okay, within one candle, my target is reached. After that, what I can do, I can trail my profits. I can trail my profits, or what I can do, once again, I can market day low. See, now if you are let's assume you are watching the market after 10 or 10:30 only. Okay, if you are watching the market after 10:30, once again mark the day low. When this day low is broken, again you can go for a short. Okay, when this day low is broken, again you can go for a short. So just look at the action replay. See, short means you can buy put option, or you can short in Bank Nifty futures. Okay, short means you can buy put option, or you can short in Bank Nifty futures. Now see, now I will go for a short. Now I will go for a short. Okay, because day low is broken. Okay, day low is broken, and now there is a fresh day low. Now there is a fresh day low, so I will go for a short. My stop loss will be above 20 SMA. Somewhere around here, I will be keeping my stop loss. My stop loss is above 20 SMA. See, the candle is going down very smoothly, okay, almost the 50 percentage. Now in this case where you will keep your target, this day low and S3 50 percentage will be a target. Okay, always you should consider 50 percentage, don't forget this 50 percentage. Okay, because this 50 percentage target will be easily achieved. After that only the complete target will be done. Okay, so first you should always consider the 50 percentage. Okay, so if I am shorting in this red candle, what will be my target? This 50 percentage will be my target. This 50 percentage will be my target. So approximately how much points I will be keeping as my target means, see, approximately this will be my target. This arrow will be my target. Okay, so I am getting around 80 points in futures. I am getting around 80 points in futures. Okay, see, this is how you have to trade a falling railway track pattern. Okay, each and every time you just mark the day low. When the day low is broken, you take a safe entry. When the day low is broken, you can take a safe entry. See, when the candles are going above 20 SMA, you should be little cautious. Okay, when the candles are going about 20 SMA, you should be little cautious because the bulls are gaining momentum slowly. In a falling RTP, 20 will restrict the candles, 20 will give resistance for the candles. Now if the candles are going about 20 SMA, you should be little cautious because the bulls are gaining some little energy. See, this is how you use a, this is how you trade a falling RTP. Okay, I hope everybody is clear now how to trade a falling RTP. Okay, see, now the day low is not getting broken. Can you see? Can you see? Previously we shorted here, okay, and at the 50 percentage we booked the profit. Now this is the day low. Now this is the day low. This is the day low. Now that day low is not broken. Okay, so you should not short out of enthusiasm. You should not short out of enthusiasm. Okay, you should wait for the day low to be broken. Otherwise you should not take any entry. See, this is how you have to take a trade. See, as soon as the candles crosses above 50 SMA, falling RTP is over. Because in a RTP, I told candles will take resistance at 20 SMA or 50 SMA. Okay. Now, if the candles are crossing 50 SMA, it means the trend is over. The downtrend is over. Clear? I have shown you the action replay of falling RTP. Okay, this is how you have to trade a falling RTP. So in a RTP, the candles will be taking repeated resistance at 20 SMA. Okay, see here, all the examples which I have added here are pure RTPs. See, the candles will be taking repeated resistance at 20 SMA. See, in this candle also, after seeing the first two red candles, okay, many people will go for a short. Okay, but we are waiting for the confirmation of RTP. Okay, see, this is the day low. The day low is broken here. Okay, as soon as the day low is broken, see, the candles are slowly inching downwards. See here, and once again on December 26, it is a falling RTP. Okay, at 10 o'clock, RTP is clear, visible for you. Okay, you draw the day low. When the day low is broken, you go for a short. Once again, candles are taking resistance at 20. Day low is broken, go for a short. See, once again, day low is broken and the candles are going down. This is how a falling RTP will be forming. This is how a falling RTP will be forming. This is also same example. Okay, as I told earlier, sometimes falling RTP will be very clear in the morning. Okay, in that case, you can easily go for a short opportunity. Chandrasekhar, yes, day low is today's low. I am telling day low means today's low. See, this concept works everywhere. Stocks, index, crude oil, everywhere you can apply this. Even in crude oil, I will show you the example. See, each and every time the candle is breaking the day low. This is Reliance Industries. Each and every time the candle is breaking the day low. And another important thing, RTP is valid only for that particular day. RTP will not continue for the next day. There are few conditions for RTP. RTP will not continue for the next day. Krishna, you have to always consider candle close for day low. Always you have to consider the candle close only. See my chart arrow. See the arrow which I have mentioned. I always mention the candle which is closing below day low. See the arrow mark. See the arrow mark. Whenever the candle is closing below day low, you can go for a short. See, already I told RTP forms in the morning. RTP forms in the morning. Okay. If it is forming in the afternoon, don't consider. If RTP is forming after 3 p.m., if the RTP is forming after 2 p.m., don't consider. See, this is Bata India chart. See, Bata India, I have added the chart whenever I took the trade. See, RTP is visible for me. Okay. And see, the candles are breaking the day low. You can go for a short. Okay. Book your profit at 50%. Once again, day low is getting broken. Book your profit at S2. Our CPR works beautifully in stocks, index, commodity, everywhere. This is an example for long opportunity. Okay, look at the RTP. This is a rising RTP. In a rising RTP, see the candles are breaking the day high. Where is the day high? First two candles high is called as day high. When the day high is broken, you can go for a long. Once again, day high is broken, you can go for a long. Okay. So each and every time when the day high is broken, you can go for a long. Once again, same example. See RTP on December 13. I have mentioned the date. Why? I have mentioned the date because you can also go back to the same date and you can check by yourself. See, when the day high is broken, you can go for a long. See, this is how you identify a trending market. So, whenever there is a rising RTP, whenever there is a falling RTP, you can easily identify. See, on February 20th, it is an RTP. February 20th, it is an RTP. When you will take your entry? When you will take your entry? See, you have to take entry when the day high is broken. Where is the day high? This is the day high. This is the day high. Okay. When the day high is broken in this green candle, you can go for a long. You can go for a buy. What is your target? What is your target? Your target is nearest CPR. See, R1 is very near. Okay, R1 is very near, so you cannot keep R1 as your target. So what you can do, you can take R1, R2, 50%. Very simple. This is how we take a comfortable trade. This is how we take a comfortable trade. Clear? If you have any doubts in RTP, please ask me now. Selected questions. I will reply to selected questions. If I am not replying for your question, then it means your question is very simple. If you are, do you understand rising RTP and falling RTP? This rising RTP and falling RTP, you can apply for stocks also. In equity cash also, you can practice with 10 shares or 20 shares. See, when the candle is closing above day high, immediately you enter at the closing price. Hemavati, on February 20, on February 20, day high is getting broken. This is day high. This is day high. Where it is getting broken? In this green candle. Immediately at the closing of the green candle, immediately you enter. Immediately you enter in this green candle and place your target 50%. Or even if you are happy with your profits, you can exit early also. No problem. See, Prashant is asking how to convert 20 SMA distance as per point for stop loss. See, it's very simple. Okay. When you are entering at 10:45, okay, look at the 20 SMA. Okay, look at the price, approximate price of 20 SMA. See, at 10:45, the closing price 957, I am going to enter. Now, what is the 20 SMA price? I will be keeping my stop loss below that. Okay, so my stop loss will be around 900 or 880 or 890 like that. Approximate stop loss below 20 SMA. Because in a RTP, candles will not come below 20 SMA. So only we are using 20 SMA as a stop loss. See, Praveen Kumar is asking a good doubt. Okay, if there is a support or if there is a resistance, can we go for a short or long? He is asking. Yes, of course you can go. Of course you can go. No problem. Because 20 and 50 are pushing the price. Okay, 20 and 50 are like a bungee jump. Okay, the candles are jumping from 20 SMA. So it will break the resistance easily. So you can go confidently for a long or short. See, Krishna Sagar, you can see the equity chart and you can go take the trade in options. Okay, and when your target is done, for example, when your 50% target is done in equity, immediately you exit in options. Okay, for that you have to trade only in deep in the money contract. Okay, if you are seeing options chart also, no problem, that is also good only. See, Bhaskaran is asking, sometimes it reaches day high and comes down. Yes, sometimes it breaks the day high and again it comes down. Okay, in RTP, sometimes only your stop loss will be hit. Bhaskaran Subramani, in a RTP, out of 10 trades, maybe 3 trades or 2 trades, your stop loss will be hit. Because sometimes we will get fake RTP also. Sometimes we will get fake RTP where the day high will be broken and immediately it will come down. So those kind of days are possible only. We can, that is out of control. It happens. Arup Chatterjee, 20 SMA changes for every 5 minutes. Should we change our stop loss? Yes. As the candles are making higher highs, for example, see on 20th February, this green candle was breaking the day high. And each and every green candle is going higher and higher. Okay. So what you can do, you can change your stop loss. Okay. Your stop loss is initially at this particular point. After that, what you can do, you can change your stop loss manually. Slowly you can bring your stop loss. Okay. That you need some good amount of practice. Okay. So you can change your stop loss. No problem. Chandrasekhar, if the wig is breaking day high or day low, you should not take position. We need a candle close. We need a candle close. See, Nagesh Shetty, if your stop loss is 90 rupees and if your target is 150 rupees, no problem. You change your stop loss. You change your stop loss. You can still stay in the trend. Nagesh Shetty, you can change your stop loss and you can still stay in the trend and book your profit according to the levels. See, Prashant Kumar, this strategy is, everybody listen, this strategy is only for trending market, not for sideways market. Prashant Kumar, I already told, okay, rising RTP is for bullish market and falling RTP is for bearish market. Don't forget. So next we will see about sideways market. Remember, there are three types of market. Bullish market, we will get rising RTP. In a bearish market, we will get a falling RTP. In a sideways market, we will get a flat and zigzag moving average. Okay, I will show you. I will draw and show you for better understanding. Okay, see, I have already mentioned, Prashant Kumar, see the top, bearish market. Okay, for bearish market, we will get falling RTP. For bullish market, we will get a rising RTP. Arup Chatterjee, Arup Chatterjee, see yesterday's crude oil chart. For crude oil, you should see in US oil only. Okay, don't see MCX and don't tell it is a railway track pattern. Arup Chatterjee, see yesterday's crude oil. Yesterday crude oil is a falling RTP. And you can check in the historical charts also. In crude oil also RTP works. RTP works in currency markets also. Okay, you check in crude oil also, RTP works well. Now we are going to see sideways market. Sideways market is very simple. In a sideways market, 20 and 50 will be flat and zigzag. For example, as I told earlier, this is rising RTP. This is a falling RTP. Okay. In a sideways market, what happens? See, 20 will be going like this, zigzag. And 50 also will be going like this. So 20 and 50 will be flat and zigzag. 20 and 50 will be flat and zigzag in a sideways market. In a sideways market, 20 and 50 will be flat and zigzag. Now the very important thing is, in a zigzag, flat and zigzag market like this, what happens? Candles will be going down. There will be a sudden big red candle. Okay, immediately you will go for a short. Immediately everybody will go for a short. But what happens? The next candle will go up and it will hit all your stop losses. Once again, when the candle is going up, there will be a very big green candle. You will go for a long, I will go for a long, everybody will go for a long. But what happens? The next candle will come down. Okay. So whenever 20 and 50 are flat and zigzag like this, we will get many trap candles. This is called as a trap candle. This is called as a trap candle. Okay. Because people will think, oh my God, market has broken the day high. Market is going to go high. Everybody will think, but what happens? It is a trap, and you can easily identify the trap when 20 and 50 are zigzag. Okay, you can easily identify a zigzag. You can easily identify a trap market whenever 20 and 50 are zigzag. Okay, and during expiry day, if you are an options trader, okay, if you are an options trader, during expiry day, during Wednesday, during Tuesday, there will be premium decay. There will be premium decay. Okay, that premium decay you can easily identify using 20 and 50. If 20 and 50 are flat and zigzag, easily you can tell it is a premium decay day. Easily you can tell it is a premium decay day. Okay, because whenever there is a premium decay in options, 20 and 50 will be flat and zigzag. Okay, so whenever there is a 20 and 50 are flat and zigzag, you should not trade. Okay, so 20 and 50, it is a no trade zone. Clear? I will show you the example of charts. I will show you the example of charts. See, this is the example. See, 20 and 50. See the structure of 20 and 50. Many people will ask, it is looking like a railway track pattern. See, at 10 o'clock, it is looking like a railway track pattern. Of course, yes, but day high is not broken. The day high is here. Okay, this is how you identify a fake RTP. In a fake RTP, day high will not be broken. Okay, so this is not at all a RTP. This is not at all a RTP. Now see the structure of 20 and 50. See the structure in 20 or 50. The 20 is going in a zigzag manner, and see the 50 is also going in a flat manner. So if it is going like this, then you should strictly avoid trading. Okay, don't take trading in these areas. Okay, you should avoid trading, because what happens? Candles will be going down. We will think we should go for a short, but what happens? Immediately a big green candle will come. Okay, and as soon as we see these subsequent green candles, what we will think? Okay, we will think market will go up to day high. We will think, but what happens? Market will come down. The immediate next candles will come down, and it will give us a fear. Okay, and after that, see, after reaching the day high, again they are coming down, but once again they are jumping back, and once again they are coming down. Like this, the candles will be confusing us. The candles will be confusing totally. So you should avoid whenever the 20 and 50 are zigzag. Whenever 20 and 50 are zigzag, you should definitely avoid. You should definitely avoid. Now see this example, Jan 29. See, there is no pattern at all. If you see there is no railway track pattern, you should avoid. See, 20 and 50 are going in a zigzag manner. Okay, 20 and 50 are going in a zigzag manner. 20 and 50 are sleeping. There is no energy for 20 and 50. 20 and 50 are sleeping. Now look at the trap. See, red candles are coming. Everybody will go for a short. Immediately candles are going up. Now after seeing this giant green candle, everybody will go for a long. But see, immediately the candles are coming down. This is how trap occurs. Okay, many people will tell, when I am buying it is going down, when I am selling it is going up. Many people will tell because they will be trading in these kind of days, these kind of sideways days people are trading. That's why many people tell, as soon as I buy it is going down, as soon as I sell it is going up, people will be telling. The reason is, this is the reason. Okay, see this example once again. See the structure of 20 and 50. It is a dead sideways market. See, market is going up, coming down, again going up. See the sideways market going up, coming down. Okay, so it is a total confusing market. See the structure of 20 and 50. Your eyes should see the 20 and 50. See, 20 and 50 are flat. Both 20 and 50 are sleeping. So you should not trade. Okay, you should not trade. Now see, repeated crossover. People will teach you crossover strategy. Okay, if you are following crossover strategy, you will lose all your money. Okay, see, it will cross, it will come down. Okay, it will cross, it will come down, and see, it will be confusing totally. See, and again, this is a fake RTP. This is a fake RTP. How you can easily identify a fake RTP? See the structure of 20 and 50. 20 and 50 are looking like a RTP. Okay. See, day low is broken. Where the day low is broken? The day low is broken here. But what happened? Candles are not having the energy to go down. Okay. The moment candles cross the 20 SMA, your stop loss somewhere around here is hit. Okay, your stop loss somewhere around here will be hit. So this is how a fake RTP occurs. Okay, sometimes fake RTP also comes. Okay, and see, the market is sideways in this area. So you should avoid trading. So when you use the moving average, you can easily identify whether you should trade or not. The beauty of using moving average is, it will tell you the trend and you can decide whether you should trade today or not. The beauty of moving averages is, it will tell you whether you can trade today or not. So you can, so half of your tension is reduced. Half of your fear is reduced because you know the trend. When you use the moving average, you know the trend whether you can trade or not. Okay, now see here, on these days, immediately you can decide you should not trade. See, it is not at all forming a RTP. The moment you see a crossover at 10 o'clock, you can easily tell it is a sideways market. Okay, at 10 o'clock there is a crossover. We need RTP only, right? The moment there is a crossover, you can tell it is a sideways market and you can close the system. If you want, you can do option selling. If you want, you can do option selling, but I cannot tell how to do option selling. I don't know option selling. I don't do option selling. If you want to do option selling in sideways market, definitely you can do because trend is known to you. Clear? See, this is how we identify a sideways market and this is how we identify a trending market. So many people, what they do, they will be getting trapped in a sideways market. Okay, they will be getting trapped in a sideways market. See this example, till 10 o'clock, RTP is not forming. Till 10 o'clock, there is no RTP. Okay, now it is looking like forming a RTP. It is a fake RTP. Don't take position. Okay, it is looking like forming a RTP, right? What I told, till at 10 o'clock itself, RTP will be visible for you. When I give you the material, you can compare the charts and see. RTP will be forming exactly at 10 o'clock or before 10 o'clock. After 10 o'clock, if it is forming, it is a fake RTP. Okay. So this is how we identify a sideways market. Okay. So now you know how to identify a bullish market, how to identify a sideways market, and how to identify a bearish market. Okay, now there is one final character for 20 SMA. There is one final character for 20 SMA. So far what we saw, so far we saw rising railway track pattern, which is for bullish market, and in a bullish market we will be getting higher high and new day high. In a falling RTP we will be getting bearish trend, and lower low, new day low we will be getting. And whenever the 20 and 50 are flat and zigzag, we will get a sideways market. Now there is one thing, okay, out of 20 trading days, approximately 5 to 8 days we will get RTP. Approximately 5 to 8 trading days we will get RTP. So the remaining 12 to 15 days the market will be sideways. Clear? The remaining 12 to 15 days the market will be sideways. Now we cannot sit idle without trading for 12 days, right? We cannot sit simply without trading for 15 days. Am I right? We cannot sit simply without trading for 12 days, for 15 days. So in a sideways market, whenever 20 and 50 are flat and zigzag, in a sideways market you can trade based on 200-day moving average. So whenever the market is sideways, you can trade based on 200-day moving average. Okay. In the beginning, I told we are using 3 moving averages, 20, 50 and 200. 20 and 50 are twins, both are having same character. Now, when we will use 200, we will use 200 only when the market is sideways. So, if there is a rising RTP, you don't want to use 200. If there is a falling RTP, you don't want to use 200. But if there is a flat and zigzag RTP, if there is a flat and zigzag 20 and 50 SMA, definitely you should use 200. Okay, that 200 SMA tricks we will see later. Okay, now there is one last character. This is the last character of 20 SMA. This last character is a unique character for 20 SMA. This last character is a unique character for 20 SMA, and this character will happen at 9:15 itself. Many days, 9:15 itself we can take the trade based on this character. I will tell you what is that character. This is a very, very unique character for 20 SMA. Nobody knows this. Okay, nobody knows this. 20 SMA unique character, which is 20 SMA attract candles. 20 SMA attract candles. How the 20 SMA is attracting the candle? There are 3 cases for 20 SMA attracting candles. The first case is rising 20. The first case is rising 20 SMA. The second case is falling 20 SMA. Okay, and the third case is sideways, zigzag 20 SMA. Zigzag 20. Now what happens? Listen carefully. This is a very important and very unique trick. Okay. Now what happens in a rising 20 SMA? There will be a gap up. There will be a gap up. Now the candles will be going far away from 20 SMA. The candles will be going far away from 20 SMA. The distance between 20 SMA and candles will be very high. Okay, the distance between candles and the 20 SMA will be very high. Now what happens? Slowly the candles will be attracted towards 20 SMA. Slowly the candles will be attracted towards 20 SMA. This reversal point, okay, when the candles will reverse, I am telling when candles are far away from 20 SMA, 20 will attract candles, I am telling. When the reversal will happen, when the candles will come down, the candles will come down as soon as they reach R1 or previous day high, don't forget. So, whenever there is a gap up whenever the 20 and candles are far away, you can expect a reversal exactly at R1 or previous day high. And when you see some good size red candle, you can go for a short. This is for short opportunity. What is your target? Your target is 20 SMA. This is a very quick scalping. This is a risky scalping. This is a very quick scalping. So you need a lot of practice. Initially, don't try this. Okay. See, if there is a gap up with the red candle, directly you can go for a short. I will tell you. There will be a gap down. Now we are going to see second scenario. In second scenario, there is a gap down and the candles will be going down. Now the distance between the candles and the 20 SMA are far away. The distance between the candle and the 20 SMA are far away. Now what happens? Slowly the candles will be attracted towards the 20. When the reversal will happen? How the reversal will happen? When the reversal will happen? The reversal will happen exactly at S1 or previous day low. The reversal will happen at exactly at S1 or previous day low. Clear? So whenever the candles are far away, from 20 SMA, you can expect a reversal at S1 and previous day low. Okay, and this trick happens at 9:15. As soon as the first candle or second candle is closing, you can easily identify. So in the morning itself, you can apply this trick. Okay, in the morning itself, you can apply this trick. When there is a zigzag 20 SMA, candles will gap up. Okay. The candles will gap up and it will be giving a red candle. Directly it will be giving a red candle and directly it will be coming down. Okay. And this also happens exactly at R1 previous day high only. Similarly, there will be a gap down. And we will be getting green candles, continuous green candles. Okay. So in this case, what you can do, you can go for a long, and this will happen exactly at S1 and previous day low. Okay. So here we will go for a short. See here we will go for a short. Okay. Our target will be 20. Here we will go for a long. Okay. Our target will be 20. So this is a very small scalping. This trick is especially for small scalping. You have to be very quick. Our profit will be very small. Okay, so you have to be very quick. I will show you the examples. See here, this happened on Jan 6. What you have to do? At 9:15, when market is opening, you have to observe the first candle and the 20 SMA. You have to observe the first candle and the 20 SMA. And you have to see whether there is distance between 20 and candle. So at 9:15, you should see the candle and the 20 SMA and you should check whether there is distance. Okay. Now when you see a red candle, when you see a very good red candle, okay, you can go for a short. As I told earlier, this is a small scalping. As soon as 20 SMA is touched, immediately you should exit. This trick is only for opening. Okay, you should not do in between the day. This is only at 9:15 you should do. 9:15, 9:20, 9:25. Okay, immediately after seeing the first candle, don't go for a short. Wait for a red candle, after that go for a short. See here also, what you should do, see the first candle, see the 20 SMA, okay, there is a distance between candle and 20 SMA, okay. Now see, they are rejecting perfectly at R1. Can you see? The candles are rejecting perfectly at R1. After seeing the second doji candle, after seeing the second red candle, you can go for a short. Place your target at 20 SMA. Place your target at 20 SMA. Very simple. This is how you can do a quick scalping in the morning itself. Now see here, this is a gap down, okay. See the first candle and the 20 SMA. There is distance between the first candle and the 20 SMA, okay. Now this is S1 and this is previous day low. So the reversal is happening inside the area only, okay. Now see the second big green candle. This second green candle is telling you market is going to go up, okay. And the second green candle is breaking the first candle high also. The second green candle is breaking the first candle high also. You can go for a long. What is your target? 20 SMA is your target. 20 SMA is your target. This is a very quick scalping. Okay, you should exit very quickly. In RTP, you can trail your profits, but in this trick, definitely you should book early. Definitely you should book some quick profit. You should not wait for a long time. Now see, these are very beautiful days where you can make easy money. See, I told you. See the first candle, see the 20 SMA, see the distance. There is a distance between 20 and candle. The first candle is a very big red candle. Okay, after seeing the first candle itself, you can go for a short. As soon as 20 SMA is reached, you can exit. After that, RTP is forming. After that, you can follow the RTP trick, no problem. See here, see on Jan 17. This is a very important day. This is a very important day because see, the first candle is here and the 20 is here. Okay, there is a very huge difference. The distance is very big. Okay, what I did on Jan 17, after seeing the second green candle, I went for a long. Listen carefully. After seeing the second green candle, I went for a long because the first candle high is also broken. So I went for a long. Okay, my stop loss was below the S2. This is S2. I kept my stop loss below S2. But unfortunately, what happened? My stop loss was hit in this red candle. I did not expect the market will come down. I was expecting the market to go up at least to S1 and previous day low. I was expecting at least the market will go up to S1 and previous day low. But unfortunately, my stop loss was hit by this red candle. But what I did, once again the market recovered. See, once again the market recovered and it started going up. What I did, again I entered in this green candle. Again I entered in this green candle. Okay, and once again, as I expected, I booked my profit here. Because before 20 SMA, see clearly, before 20 SMA, S1 and previous day low is there. So you have to book your profit at S1 and previous day low only. Don't wait for the candle to touch 20 SMA. As soon as S1 and previous day low is reached, immediately you book your profit. So this is how we take a quick scalping. This is also another beautiful day. See the first candle itself red, second candle is also red. There is a gap up opening. Immediately go for a short. Immediately go for a short and 20 SMA will be a target. Okay. So these are the true and real character of 20 SMA and 50 SMA. So as I told earlier, we saw all the tricks. rising RTP, falling RTP, sideways, and 20 SMA attract candles. Remember one thing, this 20 SMA attract candles you should apply only at 9:15. Don't ask whether I can use it in the afternoon, whether I can use in the evening. Don't ask. You can use. It is little risky. That's why I am not recommending. Okay. So you can use, but even in the mid of the day, it will attract. If you ask me whether 20 will attract the candle in the afternoon, whether 20 will attract the candle in the evening, whether 20 will attract the candle in the night, definitely it will attract. Definitely it will attract. But for trading that, you need more experience. So initially focus in the opening trade. Okay, practice slowly. After that, you itself will gain confidence. After that, you can trade as you wish. After that, no restrictions for you. You can trade as per your wish. So now we have completed all the 20 and 50 SMA tricks.